Do you think our market's likely to react today?
Not a big game changer here, I don't think. So I think we are looking at a pretty flat start for the market. There was that announcement of the $120 billion growth pact from the EU summit last night, which includes $10 billion for the European Investment Bank. But this really didn't surprise markets at all. US markets were lower earlier in the trading session. There was a little bit of weak data out from Germany. Unemployment rose there, but they pared back losses on the market there when they did make that announcement. But I think tonight will be the night at the EU summit where they will start to discuss some more of the sort of contentious issues, things like the possibility of the ESFS and ESM or both of those possibly buying Spanish, Italian bonds to help lower their borrowing costs. So I think the market will be watching the EU summit a little more closely tonight, because there might be some more chatter there, some more positive announcements that could come out tonight, but the market really not expecting all that much. So I think our local market today in for a pretty flat start for the open, though commodities were broadly lower overnight, particularly oil, which hit 8-month lows again overnight. So we probably will see some weakness in the materials space. We saw the energy sector drag on the market yesterday, particularly with that Santos announcement, but it looks like energy will probably be another weak spot on the market today. And heading into the weekend, we do have this event risk with the EU summit, so we might see a little bit of selling on the market today. Investors may not be willing to hold sort of long positions over a couple of days where there could be significant announcements out of the EU, and of course the end of the financial year, so we could see some investors sort of looking to sell off to book any tax losses in for the year. So pretty flat start expected, and maybe a little bit of weakness on the market today.
Talk to me about the last trading day of the financial year as it is. It's been a pretty tough one. Which stocks and sectors have been worst hit and best hit, and why?
It has been a tough financial year, and I think investors will be glad to see the back of it the last day today. Over the past year, since June 30, 2011, we've seen the broader ASX 200 down 12%. Over that period, and really a lot of that weakness coming in the second half of 2011 from June to December, when we saw the Eurozone really shift back into focus. But it's also been the markets have also been pushed lower from concerns over China more recently, and of course a US recovery that isn't a US economy which isn't recovering as quickly as many had hoped. So really it has been those risky sectors which have been the worst performers. The materials sector down 31% for the financial year, and the energy sector down 22%, while the best performers have been those more defensive sectors. The telecoms up 26%. That's really driven by good gains in Telstra, and the utility space up 9% and property up 4%. So we've seen interest rates coming down in Australia. That's certainly pushed investors into high-yielding stocks, one of which Telstra's performed very well. And the banking sectors outperformed the broader market. It is down about 5% for the year, but it has outperformed, a lot to do with the dividends offered by the banks. We have been a big underperformer of the US. The US Dow Jones index is actually up 1.5% for the financial year, and there's a lot of factors at play here, but certainly low interest rates in America has helped push investors into shares looking for returns, and certainly the Aussie dollar playing a fact here, as well as our leverage to China and a lot of our market being leveraged to commodities, which have really struggled over the past financial year. But investors might be looking towards a brighter second half of this year. I think the average consensus on a survey for the end of year across analysts is around 4,400 for the ASX 200. So that'd be a 10% gain from here over the next 6 months. So that would be a positive if that came through.
In a trading hold, looking likely to update the market today on its takeover progress with Hanlong.
The news flow has been a little bit mixed for this takeover deal. It's in a trading halt, was placed in yesterday, and we probably expect an announcement today surrounding Chinese approval for the takeover from Hanlong. Sundance is, of course, developing that iron ore project in Central West Africa. It is a significant resource. The Hanlong bid is at 57 cents, and the stock has been trading at a significant discount to the offer price, and this really reflects that the market is not too sure that this deal is actually going to go through or not. If we actually have a look at a one-year graph of Sundance Resources, this blue line up the top here is 57 bid price. You can see the share price has not really even climbed close to that level since the bid, and it's not been helped by the fact that Sundance did recently announce a $40 million capital raising. That's put some more downward pressure on the price. But certainly a lot of the risk here is with regards to Hanlong being able to raise the funds to take over Sundance. Certainly Sundance, if this deal falls through, they can't develop this project on their own. They don't have the capacity or the funding to do so. So that would be a major negative for the stock price in the short term if this deal did fall through, because then they would be back to looking for a joint venture partner, possibly a 50-50 partner, to provide the funding to be able to develop this resource, which could well put them in the top 10 iron ore producers in the world. But certainly it is progressing, starting to progress now, this deal. We've seen some regulatory approvals coming through. So really the big hurdle now looking forward will be the funding for Hanlong. But the shares remain in a trading halt. I believe they will start trading again on Monday.